morning, traders. Manny Cabrera here, co-founder of NBC Trading Academy, with today's pre-market forecast for Wednesday, May the 13th. Let's quickly jump to our news items as we normally do. Today, Wednesday the 13th, 8:30, we have core CPI and PPI information. Also, very important, as we spoke about earlier this week, Chairman Powell from the Federal Reserve Bank will be speaking. We don't know if this is a prepared speech or it's going to be a press conference, so therefore we don't know how long this conversation is going to take. But we also do know that this may obviously affect the markets, at least in the short-term basis, till he's completed speaking. So keep your eyes open for this particular report, which happens at 9 o'clock this morning. Okay, let's jump to our analysis. Market obviously behaving the way we have anticipated it to be behaving. Again, the support and the resistance is clear right between the SMAs. Let me just remove this fib here real quick so that we can leave the fib. Oh, here we go. Let's just remove this fib for a second, and here we go. You notice market bouncing between the 80 SMA and the 20 SMA, and I said to you that the market's going to be churning here for several days, and that's basically where we have been bouncing around. Now, we had a big day yesterday. Remember, we had a big volume day yesterday, which is big in reference to the way it's been, but we did 1.7 to the downside, stopped like a dime on the 20 as we found resistance on the 80, and here's where we find ourselves right now. Can the market move lower? Absolutely, the market can move lower. That's why I add this fib here. So just to illustrate that right now, from the original drop way back in February through this bounce here on the 23rd, the market has recovered 61%, 61.2%, which is a Fibonacci, which is the golden area here. Can the market move lower from here? Absolutely. It has levels that it can come down to. The market come down here to the 50. Once again, it can come back all the way down to here. We are not really certain which way the market is going to go. We do know that we have very clear supports and resistance areas. Above this level here, if the market remains churning here, you're going to find a confluence of the 80 once again with the 200. Now, we may get to the 200 just by virtue of the fact that the market is moving sideways, and we can get a little bit of downdraft on the 200, but ultimately that's the ultimate level of resistance. That's the one where Wall Street is keeping his eye on. That's the one that we're expecting the big test to come in, at least on a daily basis. Once we reach here, what is going to happen? Are we going to hold? Is the market going to hold resistance? Is the market going to break through? If not, obviously, again, we're going to have the 80. We have by the time we'll have the 80, we'll have the 20 and potentially the 50 as resistance, as support areas. And again, we'll have this big blob of resistance and support, a nice consolidation here and moving forward. What is the market looking for? The market is looking for a reason to move higher. And I think that it's going to start looking at things like consumer reports, consumer confidence. It's going to look at the number of cases whether the number of cases is going to increase after the partial opening of certain cities. It's just very, very cautiously. That's what you see here, a market that's very, very, very cautious. Therefore, that's the posture of the market, being cautious. We need to learn to be a little bit cautious and not to be over aggressive in these types of markets, and to try to remain impartial to general direction. In other words, try to play. Your play should be based on the immediate momentum. In other words, what's happening in my immediate trading chart at the moment. We got the big scheme. We have a mixed market. Therefore, longs, shorts are in play depending on which way the trend and or runs are going. So that's my advice for you while we're remaining here. Now, volume significantly lower at 1.5 from where we were. The ATR is at a more manageable 91, our range. So we do have a market that can be operated. Again, we cannot fall into the temptation of having any biases in this point unless the market can break key levels and we can see clear runs in any particular direction. Let's jump to another one of our time frames as we usually do here. And as we can see here, Market coming off. Remember, we were talking about this resistance level here, which the market used as support. Market has broken clearly through that one. And even the trend line that we have here, market broke clearly through it. Found the bottom off this trend line up here. If you see this support level here, market clearly bounced off there. Doesn't like it down here. If you notice, it had a similar move here. And again, if you notice, the market's locked between two key areas. This price level here at about 20.83, kind of the top, 28.84, and the bottom here right at about 28.24 or so. It's basically a 60-point range between these 2 points here. This is where the market is moving. We do have this trend line down here, which the market can potentially come and retest before it goes any higher. But that's where we find ourselves right now, you see? So a break of a key area like this, you go short. A bounce off this area with the beginning of a trend line, then you start looking for long until you get to an area like this. Then you start worrying about or thinking about, are we going to break or is it going to hold? Okay, we oscillate between these two areas as we did before. It's all potentially available to you. The thing again is not to have a bias, not to develop a market bias where you can start trading the market based on just mere general direction. We have to look at the immediate at this point. Here's our intraday close from yesterday. Market clearly breaks clearly through there in the pre-market. Market bounces off the bottom, that bottom what I showed you before on the other time frame. There's a trend line to the upside. We're currently we broke above the intraday high low from yesterday. Where's our support levels? Right along here. Anywhere along here is a support level, including the intraday low. That could be a potential place for the market to come retest before it attempts to go lower. If obviously it doesn't, then it's going to go lower, and then our job becomes a lot easier because it's a lot easier to trade to the downside, and there's a very clear support level here again, and that's what we're looking at today. So be patient, don't force this market. This market is not one to be trifled with. Put in your stops and let the market do its job.